opportunities are always out there. There's abundance of opportunity. So once you kind of figure out what's right for you, I think stick to it and master it. Real estate, the stakes can be very high. There's only so many mistakes you can make before it can be really costly. The real benefits overall is that if you were to do it yourself, you would have to buy the whole property.
We were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. Once again, we're out here having a blast, you guys. We're helping real estate investors and real estate educators. Are you out there building a portfolio, fixing and flipping, or are you out there providing content to real estate investors? This is the podcast for you. Let's get going. Super excited about this one because we're going to be learning about something that I don't know anything about. And, one of the selfish reasons, Ricardo, to our guest, that I do this is to meet people like you and learn from you. So, Ricardo, you've been doing this for over a decade. You're an expert on blockchain and fractional ownership. Your specialty is luxury properties. You're calling in from Barcelona. So I think you might be the first international guest on the 100 or so shows we've done. So this is really cool, man. Welcome to the show.
Yeah, thank you for having me, Kevin.
Yeah, so 10 years in business, and you say it's a Web3 platform. Oasis is the name of the company. You're the founder, you're the CEO. I don't even know what Web3 is. So I would just say like a web platform, but you tell me, what does Web3 even mean?
So I suppose people use the term Web3 to describe the new or at least the updated usage of the web. So you had Web 1, which is mainly based on reading content. Web 2, gotcha. Platforms like Facebook, where you're able to actually read and create content, you can write content. But with Web 3, it enables you to actually own, your content, and you can own parts of the platform. So I suppose the philosophy is around ownership, not just usage.
Okay, that makes a lot of sense. So it's like a third generation.
Exactly.
All right, well, take me back 10 years. So you've been doing this a long time. I don't even think, blockchain's been around that long, but people didn't know about it back then. So tell me, how did you even get into this business?
I suppose just to clarify, I haven't been in tokenized real estate for 10 years. I was introduced to it back in 2020, but I've been actually doing it for 2 years. But real estate, I've been doing for 10 years in total.
Got it. Okay, so tell me about your real estate experience. How'd you get started?
So I actually got started into real estate from, I would say, the bottom, just doing inventory reports, if you know what they are. Literally going around properties between tenancies and doing a report, an inspection on the actual property. And then from then I got introduced to short-term rentals. So that's really when I got, stuck in terms of managing properties, renting them out with guests, etc. And over those years, built up, a sizable portfolio and started to, invest myself. So that's really where I got started in real estate.
So you were working for somebody else, like doing inspections, sort of.
That's when I started, yeah.
Yeah, and then you migrated into owning your own portfolio. Yeah. And then later, now you're doing something that's really cool. So tell me about your first deal. How did you go from inspecting properties to owning properties?
Interesting. So my first actual deal came from a landlord who was selling their property, and one of the people I used to work with, he's like a gas engineer. He said, I've got this person who's looking to sell. So it was like a direct, purchase. And that was my first, entrance into, real estate. And myself and my business partner, we got involved, and it was a complete disaster, to be honest. I think you probably couldn't have had, a worse start. But I suppose it's about the experience, right? At that point, it's really just learning the ropes. I didn't have, the right training in terms of the best properties to invest in, etc. I was just eager at that time to learn and to develop. Years later, I actually got to the point where I was actually, going out finding deals for my clients, specifically. And that's what really led me towards what I do now, or at least gave me the experience into what I do now. But yeah, I did get much better over the years.
Yeah, I bet
my
you
first
did.
one was worse.
Mine was a disaster too, man. I think it's sort of normal to have your first one not go to exactly to plan, but sounds like you're pretty happy you took the leap, right? You went and got involved. So
exactly.
Tell me, you just gave me something I wrote down in my notes here, but you didn't have the right training. So that might have been maybe your biggest mistake because you said that as you were describing the deal. But why don't you tell me about some other mistakes that you made that you learned from?
I think in hindsight now, I think thinking, too small. I think starting off, you really focus on what you can personally afford. And I think as you get more experience, you start looking at ways you can raise money for your deals, so you don't have to rely on your own funds. Because I think you only got one life essentially, and the idea is, it's like Monopoly. You want to, build your portfolio, and if you're only reliant on the income you generate and what you can invest in, it's a slow, crawl to the finish line essentially. Whereas the real, I suppose, the real magic is in the actual deal. How can you find the deal? How can you negotiate, the right deal? And once you can do that and get really good at that, there's a lot of investors who would invest with you to take part in that deal. And I think that's probably the easiest way to get started.
So the lesson is don't limit yourself to your own resources.
Yeah, exactly.
Yeah. Okay. Yeah. A lot of people, when they're getting going, they don't have the money, they don't have the knowledge, and sometimes, frankly, Ricardo, they don't have the time, right? So you're saying basically a syndication, like bring people together that all have different skills or something, and then go out and do a deal.
I think you have to have at least one of those things, I think especially when you're thinking about investors, they typically don't have the time to, go out and negotiate and find they have the money. And if you don't have the money, but you have the time, or really more importantly, if you've got the skills, the expertise, you can bring all those things together. So you definitely need something.
Yeah, you need to add some value. So
yeah, exactly.
When I was getting started, I had some time. It wasn't very much, but I had time and the energy and the effort. But I didn't have the money. I didn't have the experience, any of that, right? So I would just grind, probably like you did when you were getting started, and just kind of figured it out. But yeah, try to add value, and then it'll start coming.
Exactly.
Be willing to make some mistakes, right? Because it sounds like you've made some.
Yeah.
How did you go from your own deal with you and your partner, and then you decided to let's start bringing in capital from passive investors?
I suppose when our client base started to build to that point where, you already built the rapport, you've got, credibility, you've been working for them, for that long period of time, it's much easier to start approaching. I think one of the main barriers is some people have an issue asking for money, or how to actually present the deal, these type of things. And I mean, if it helps, if you've got friends and family, you have, money that would want to invest with you. But if you don't, it helps if you've got, a track record and a rapport that you've built up over time with clients. So that's really how we, I suppose, broke that barrier.
So if I'm hearing you correctly, if you don't have the experience or the track record, you partner with somebody that does to help you sell what you're trying to sell to private investors?
Yeah, exactly. I think what we were saying before about you need to have at least one of the three: time, experience, or the money. You can outsource the experience, and you can bring in the money as long as you have the time.
So you can outsource experience. I love how you worded that. We talk about on this show frequently, it seems like it comes up. One of the things that I've noticed from pretty much every single guest is that the people in your sphere, or the people in your life that you attract to you or you allow in, make or break you. Like, it's that important to the people you decide to align with. So you could align with people that have the experience you don't, and they could go out there and show you how to do it. But you got to put yourself out there, right?
Yeah, exactly. But I think in real estate in general, there's, a lot of people on YouTube, on Instagram, etc., LinkedIn, who have the experience, and they talk about, their failures, talk about their successes. They're, reachable people. You may have to pay, but the information's out there, and you don't necessarily have to, learn the hard way. You can actually fast track that process.
So we're talking a lot about understanding the deals and getting educated and all that. Where would you suggest we go?
Interesting question. I would say it's specific to the type of strategy you want to focus on. I mean, me personally, I focus on short-term rentals. So if that's something that you'd want to do, there's specialists in that area that you can approach. If you prefer, multifamily units, you prefer commercial properties. I think it all depends, and I think each individual, investment strategy has its own. It appeals to different people, and I think you just have to. I mean, me personally, I feel like I've explored them all to find out what actually works for me, But I think once you figure that out, I think there's a lot of people that can actually help you.
Yeah, I always say this, but it's so true. Like you can't, if you're chasing two rabbits, you catch none, right? So if
Exactly.
you could stay focused on one, and I learned this the hard way because look, entrepreneurs and people listening to this show have the mentality like just opportunity, right? Like everything's great. I can make money over here. I could do this, right? And so there's all of these shiny objects out there. And the reality is, yeah, they might be shiny, but you can't do it all, right?
Exactly.
So you're saying that we really need to focus in. But here's the question out of what I'm saying. How do you know what niche to get into?
Great question. For me personally, it depends on your ambition, and it also depends on your temperament, I suppose your temperament towards risk in general. So there are, lower risk strategies, there are higher risk strategies. I would say short-term rental is probably in the middle somewhere. You also have, what do you like to work with contractors? Are you more of a people person? Can you motivate people? Then you're probably more suited for, flips. But if you don't, and you just want to invest passively, then maybe just buy to let, something you can just, buy, hand over to a manager and just collect your rent each month. I think it all depends. I mean, when I got into real estate, I knew that this was, what I was going to do as a career. So I was open to all different types of, strategies. And for me, the main thing I wanted to learn was how to really assess a deal. So being able to look at, for example, anyone could call me and have a particular, deal on the table. I'm able to assess it in 3, 4, 5 different ways to see where the real opportunity is. And if it's not for me, at least I can then pass it on to someone who is a specialist in that field. I think like what you were saying, there's opportunities are always out there. There's abundance of opportunity. So once you kind of figure out what's right for you, I think stick to it and master it.
Yeah, no, I love that advice. And it's not so easy, right?
It's
But
not.
you're right. And then with experience, you become more creative and you could see profit where others can't, right? That's what makes real estate so special. When I was getting started, probably very similar to you, I didn't know which direction to go, right? So I started chasing foreclosures because that's what you do, right? That's where all the deals are. So I'm like hitting the phones, I'm knocking on doors, and I'm doing all of this effort. And then I started working on short sales because I went to a seminar and they said, this is so easy and you could create all this equity and the lenders always take these short sales. And it was just pounding my head into the pavement and the head started hurting and I wasn't making any money. And then I switched and I really broke out when I started using lease options. And that's the strategy that took my career. But I didn't know that, right? So it's very challenging. How do you know like when to cut bait and throw another line in the water? I don't know if you can answer that, Ricardo. That's a really tough one, right?
That is a tough question. Look, so for example, like for example that you just mentioned, like you managed to land on lease options. I'll just ask you, like, what is the reason that lease options, connected with you the most?
Yeah, that's a very good question. So I read a book and I connected with the author like through the book, right? I didn't like talk to him, but it just the way he spoke, the way he was writing and the verbiage he was using when he was writing out his scripts, it just felt very comfortable for me. So I started role playing, with friends and stuff. Like, this is what I say, this is what I'm going to say. And then I got into a house and I did what the book said and it actually worked. So it just sort of resonated, I guess.
I think like that's probably one of the best strategies, I would say. Overall, if you can master, negotiating lease options, I think it basically means you don't need money. You don't need much money anyway to get started. But I suppose to answer your question, I would suggest to cut to cut bait as soon as possible in regards to if you find something that doesn't resonate, that doesn't, I think there's a plethora of opportunities and different strategies that you can focus on. If something doesn't resonate with you, if you had, too many bad experiences, then, just leave that strategy alone, because I think when it comes to real estate, the stakes can be very high. There's only so many mistakes you can make before it can be really costly. And especially if it's not your money at risk, it can be very stressful, like probably sleepless nights. And ideally you want to try and avoid that. So yeah, as soon as you feel like it's not really, working for you and you have the time and you're able to kind of pivot, then I would suggest to do so.
I agree with you. And I would just say this for the listener, like, be honest with yourself. Did you give that niche a real good effort? Because if you're just like half-assing it and this doesn't work, then you're going to just be cutting bait constantly. You're never going to find, right? So just be honest with yourself and put in the real work. And if it doesn't work, then yeah, like Ricardo was saying, I totally agree. Move on.
Yeah. And I think sorry, what was you going to say?
No, I want to ask you another question, but I want to hear what you had to say.
Yeah, I think having an abundant mindset when it comes to real estate would, really helps. And not to think that every single deal that comes across your table you have to take, because some people try to force the deal or force it into a strategy that, that works for you, and it doesn't always, work out. So I think just be patient, and focus on what connects. I think it also helps if, you're around people. So for example, you was able to find support in the lease options from the book. And so you had that connection to a knowledge base. So if you needed to, you can go back to the chapters and figure out what to do next. There might be people you've connected with who've done some stuff similar that you can, create that community around you to actually, help with these type of deals. If you're trying to do it on your own, yeah, it's going to be a bumpy road, put it that way.
Yeah. I love it. So self-assessment, be honest with yourself, put in the effort, build the community. This is all great stuff. I do want to get into blockchains.
Yes.
So
okay.
This is what you do, man. This is what I had nothing about. So I own some cryptocurrency because I think it's smart to have some exposure, but it's such a small amount of my net worth, and I don't have to look at what Bitcoin's doing every day because it'll give me a heart attack, right? So I have such a small amount because I don't really understand it. So help me understand what blockchain is and how does real estate fit into that?
So I think the best way to think about blockchain is it's just an immutable ledger. And I suppose that point doesn't make sense to anyone, but it gives you, I'm trying to think the easiest way to explain it. You have, I think outside the speculative part of it, Bitcoin in itself is a whole separate entity. You have cryptocurrencies and then you have Bitcoin essentially. And okay. Bitcoin is, what we'd call hard money. It has a fixed supply for 21 million. And, it has a way that actually, creates each individual Bitcoin. Just try not to get too technical because I don't want to make it, I'm trying to keep it as simple as possible. But essentially, it's like digital gold. So the way that you would invest and hold gold is the same way you can do with Bitcoin, but it has all the benefits, as in, you can go anywhere in the world with it. You can buy and sell, literally instantly, all those type of benefits. But when we talk about, real estate on the blockchain, what we're talking about is a way that you can interact with real world assets. So you can actually, instead of think of it as a share. So a token and a share is the same thing. Essentially, it's just how you interact with it. So instead of having a physical share certificate, you would have a digital, token. And that is what you would buy and trade and sell, which is attached to the actual property itself. So think of it as
luxury. You do let's say you do a luxury Airbnb. So you offer like X number of tokens, and that's what you're selling.
Yes, exactly. So let's say you was going to purchase a property. Let's say it's $1 million, and we're going to use this on Airbnb. We're going to rent it on Airbnb. So if you wanted to, have a sort of consortium or, get multiple investors involved, you would just create a company. That company would acquire that property, and each individual, let's say you have 10 people, they say, okay, we're all going to put in 100,000 each, and they would all own 10% of those shares within that company, right? They all won't necessarily have their name on the actual deeds itself. They all will just have, shares within the company that owns the property. So that's exactly how we do it in tokenization. But instead of having the shares, you have the tokens. So we acquire the same property, we create the same company which owns that property, and then we tokenize each share. So this way, instead of having or needing to have 10 people involved that you would know in your community, you can have 1,000 people who own tokens within that property that nobody knows each other. It could be anywhere in the world. So they all can have access to that same investment opportunity. And then every time, that property makes money, let's say every month or every quarter, it's distributed to the actual owners of the token. So no one actually has to have, or get involved in the management or anything like that. You can just invest and collect your rental returns passively.
This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. Is it possible for the sponsor or whoever's managing that house, is it possible for them to sell it and not tell the token owners and then just go somewhere else?
No, you can't actually sell it. The only people who can sell it, it has to be a vote. So each token has its own vote, and they would then vote to say, yes, we'll sell it, or no, we won't sell it, whichever the case may be. In terms of management, because we don't own the property, we don't own the actual shares within it, we don't have the power to sell that property. All we can do is act on the behalf of the owners of the property. So we would then instruct, the lawyer or the agent to then market and sell the property based on what the owners vote. But essentially, the owners have full ownership rights to the property.
Okay, but you manage it. That's very interesting. So I'm trying to get my mind on this, right? So you don't own it. You're just a sponsor, but I assume you own some of the tokens. And
Legally, no. we
you
can't.
Don't?
No, we don't own the tokens. So we're just a marketplace. We just facilitate the transactions. So we go out and find the actual opportunities for the investors who, use the marketplace, and they just participate as they want to participate, and we just facilitate, the easy transactions and, I suppose, act on behalf of the investors depending on what the votes are.
So the rent comes in to you and then you push it out to the token owners?
The rent goes to the company, and then we then transfer it from the company to the owners.
So you handle all the accounting.
Exactly.
Is it possible? Because I've heard that blockchain might be the safest way to, even real estate is a good example. It might be the safest way to own real estate. Like in an LLC, for example, you could sell member units or shares, and then they could still go out and sell the property and maybe not even tell you. So that's still a risk, right? But
Exactly.
I've heard blockchain is way safer because it's transparent. Everyone can see all the transactions. Everyone knows what's going on. Is that true?
Yeah, exactly. You can query the blockchain and see whatever's happened within those tokens. You can see exactly how much money's been distributed. You can see what wallets hold individual tokens. So you have that full transparency of actually what's happening with that actual property. You still have, because there's a real world aspect of it, you still would have to put checks in place. So things like appraisals have to be automatically, done. We have to have all the compliances, in place. So that we have to register the tokens as securities to protect investors. So there's a lot more, I suppose, red tape, around just, a standard, investment in a property, but it streamlines the process completely. So as an investor, they don't have to handle any of those things. They can just, as long as they're, qualified to use the platform, they can just invest as they wish. But on the back end, we have to do, all the legwork, putting it all together.
And so are you regulated?
Yes. So the tokens are regulated under the SEC, because most of our, users are, I suppose, based in the US. So just to be on the safe side, we have to do that. So we have restrictions of, who can take part in the actual offerings themselves. And there's, a 1 year holding period, etc. So it's not as, as free as, and not anyone can get involved. You have to be an accredited investor, but essentially it means that everyone else is protected.
Okay, so you do have to be accredited. Now, I'm assuming you make your money from fees. And so those
Exactly,
just come off the top. So the rent comes into you, you strip off some fees, and everything else goes to the owners?
Exactly, yeah.
Okay, what kind of fees are we talking about?
So we charge 20% management fees on the rental income that comes in, and then we charge a 5% transaction fee on purchasing the actual tokens themselves.
So every token that sells, you get a 5% cut.
Yeah, on the initial purchase. So what would happen? We would find, let's say, that same $1 million property. Let's say it all comes up to $1 million. We then create 10,000 tokens, all at $100 each. So the initial price of the token is just the acquisition cost of the actual asset itself. So we'll basically charge 5% on top of whatever you invest, and then that's how we generate income.
And then 20%. That's where your real income is coming from, that 20% residual.
Yes, essentially. But really, our real income will come from aftermarket trades. So as the portfolio grows, because you have a marketplace where you can list your tokens and someone else can buy them off you within the platform, we would then make another fee on any transaction that happens there. So essentially, the platform makes money from having, a biggest portfolio as possible, great rental returns. So we have, active investors that always want to join, and then we don't expect, many people to trade because, it's a great investment. But if they do, we're able to obviously get a piece of that as well.
And if they trade, I mean, there's a marketplace. How, if I'm going to list my tokens to sell, how long until I can get my money back out? How big is this market we're talking about?
At this stage, it's not as big, but over time it will then grow. But essentially, because we're not broker dealers, we don't have a broker dealer's license, we can't buy them off you directly. You have to sell it to someone else within the platform as a peer-to-peer transaction. So you are still relying on someone else, within the platform who wants those tokens. But because of the price point, because of the flexibility you have, so let's say you have 1,000 tokens and you want to sell one, you can list one for sale, someone else can buy that one token, or you can list 500 for sale, for example, and then someone can negotiate and buy those from you. The idea for us is to keep new investors coming in, large institutions as well as individual investors, and to really make sure that there is a buyer at the end of each person who wants to sell.
So I'm thinking about an opportunity for an investor here. If they go to your website and they get qualified to be on your platform, but they don't want to get involved in a new deal because they don't want to pay retail, they could wait for the marketplace and someone to discount their tokens because they're trying to get liquidity quickly and buy tokens that way?
Potentially, yeah. That's a way. However, because of the type of properties that we investing, so we invest off plan. So we focus on luxury resorts that are in development. So when we buy in off plan, there's essentially capital, appreciation already locked in. So by the time that, let's say it takes 18 months, by the time that project's actually complete, the price point is now higher than it was when people originally invested. Now, that's actually the real estate price is separate from the token price, after the acquisition. So the token price itself can go way higher than the actual asset's value itself, or it could go lower than the actual asset value itself. It's just based on, I suppose, market dynamics. So it might be tricky to have that strategy to come in and, be able to get in at a cheaper rate. The reason why we charge that, the 5%, it might seem high, but it's because you're getting in at a premium rate regardless. So it's always going to be preferential for someone to come in and try to get in while in the pre-sale, while the tokens are at its lowest price, at the acquisition price of the actual property, rather than come in after.
Yeah, there's a little bit to unpack there. So I could see some pitfalls here. Obviously, you're speculating. And so you're hoping that the development goes to plan and it actually hits the values and all of those things. And I do understand that the value of the tokens, like if you take the 100% of all the tokens and what they are selling for in the marketplace, that could be higher or lower than what the actual real estate will sell for. Mm-hmm. So you could actually be overpaying and not really understand that if you're not used to this or a savvy token investor. So there is some risk here.
Well, at least you have transparency. So you can see the last time it was appraised, what the underlying asset value is. So, let's say it's lower or it's high. It's a bit like investing in stocks. You have to do your calculation to see whether the stock price is undervalued or overvalued, whether you should, invest at this point or not. And what's the future prospect for that particular company. You'd have to do the research. What's the future prospect for this development or this this country or this area in particular, to then determine whether it's a great investment for you to join in. The real benefits overall is that if you were to do it yourself, you would have to buy the whole property. So you're taking a much higher capital risk in general than you would have if you can invest fractionally. Let's say you invest $10,000 and instead of having to invest $250,000 in a property to own it. At least now you can invest and diversify your portfolio, across multiple different locations, multiple different projects, rather than, lock all your investments into one particular property.
Yeah, we talked right before we hit record, Ricardo, about the minimum investment. It's $10,000. So yeah, I mean, it's pretty much, you got to be accredited, it sounds like. But other than that, it's kind of open up to everybody to get a little bit of exposure into some luxury properties. So that's the real selling point, I think. That's the real advantage. But it's just so different than what most of us know and understand, right? Let me ask this. If I buy some tokens in a luxury property in your hometown in Barcelona, do I get discounts when I go stay at that property?
You could actually get complimentary stays within that
Really?
property. Depending on how many tokens you hold, you can actually get complimentary stays. So that's this is what, I mean, we're not the only tokenization platform, in the market. There are loads of other ones and they all focus on, their particular niche. Had it be, commercial property or, family homes, whichever the case may be. We focus on luxury resort properties so we can add that additional utility or that additional value to your investment. So not just a commodity. Imagine being able to build your portfolio, generate passive income, and whenever you want to travel, you can actually go and travel in the places that you already own, So that's the real benefit, to it.
And it's a tax deduction, right? Because you got to check out the property, make sure your investment's safe and all that.
Technically, yeah. Technically, don't take my word for it, but
Oh, you're just checking on your investment. I don't know. I'm not an accountant or a CPA, but all right, cool. So I want to definitely get to know, like, where do I go to get more information? Because look, this is such a short podcast and this is so much to unpack. There's got to be more information for me to learn about these tokens and the blockchain and buying partial ownerships in big resorts. So I want to get your contact information, website, all of that, and how to get more information. But before that, I'm going to go through my notes that I took while we were hanging out on the phone call. And I learned a lot, and I just want you to hear what my notes were, and you tell me what I'm missing, what can we add to add value to the listener. Okay. So we started off with you starting 10 years ago as like basically a home inspector, and how you got into real estate. And you took your first one on. You bought it from a landlord that it sounds like you might have been working with previous to that with your partner, and you said you learned a lot from that. One of them was you didn't have the right training. You shouldn't have been involved in the first place. You should have went and got educated first and then went and jumped in. But then you also said some other things you learned through that process was don't think small. You could do much more than your personal resources can handle. So bring in partners, money, and then you could really grow. I loved how you said this. You could outsource experience. So it's not just about bringing in private money and private capital. You could bring in private experience as well. Go to the experts for education. So find a niche and go to someone who specializes in that niche. You don't go to a general practitioner for surgery, right? You go to who knows that really well. Self-assessment I wrote down because you really need to understand what you're good at and what your passion is, what you want before you start choosing niches, and then put in honest effort. And if it's not working, cut bait quickly. So you said you wanted to get to the next one so you could find the niche that's going to work and you can start putting some energy into that. It's okay to turn down deals. I tell my team all the time, Ricardo, sometimes it's way better. Oftentimes it's way better when you say no. You can make a hell of a lot of money saying no. So get good at that. Create a community of being around people that will help and support you. You talked a little bit about the book that I was reading and how I can go to chapters. So I did actually have a mastermind group that I was working with that we all did lease options. So we had a group of people that we met with constantly and we all helped each other. So I love that advice as well. And then we got into the tokens and what you really do. And the token is basically just a share or like a member unit in an LLC, but it's all online. It's fully transparent. You could query or search the blockchain and get all the information you want. It trades very similar to a stock, except for a much smaller marketplace, it sounds like. As that gets bigger, it'll be much, much easier. Blockchain is more transparent, and I wrote down it's a marketplace. You specialize, everyone that does what you do might have a different niche. You specialize in luxury properties. So it sounds like maybe resorts, and best part, you could stay there for free if you have enough of the tokens. So how did I do?
Perfect. I'm actually surprised that you managed to recap the whole show in a few minutes.
I paid attention. Wow. I'm very fascinated by all of this. Wow. So if I was a newer real estate investor out there listening to the Real Estate Educators podcast, first of all, I'm going to give that podcast a 5-star review, but also what advice would you give me? Final piece of advice.
I would say do your research. I don't think it's for everyone. It's made to make it easy for everybody, but it's not for everyone. So do your research. You don't necessarily have to invest with Oasis, with me at all. There's loads of other platforms out there. So, I just want to bring awareness to what opportunities you can get access to these days. So I think do your research and I suppose make smart investments.
Yeah, that's great advice. And I definitely want to learn more about this. So Oasis and Ricardo Johnson with Oasis, how do we reach you or how do we get more information?
So you can actually search Ricardo Johnson on YouTube, and I've got some videos on there talking about tokenization, just to kind of give you an overview and different concepts that you can, basically an easy way for you to learn. There's obviously a lot of information already on YouTube for that, but I have it specifically. You can connect with me on LinkedIn at Ricardo C. Johnson or on Instagram at Rico C. Johnson. You can go on our website, oasisglobal.io, and there's obviously a learn section there as well. You can sign up to the waiting list, and once you're approved, you can start investing.
That sounds awesome, man. So we'll leave all of that in the show notes. So Ricardo, I know you got a lot going on. You're running a pretty big company here. It sounds like you're doing some fantastic things. Thank you so much for giving me 40 minutes of your time. I know you could have been doing other things and you chose to jump on this podcast, and I really appreciate it. For the listener, you chose the Real Estate Educators podcast. There's lots of podcasts out there that you could be listening to, and you chose to tune into this one, and I so appreciate that. If you got value like I did, please 5-star review, share it with a friend, and I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.